everyone, and welcome to this LinkedIn Live, looking at cash management shifts in 2025, specifically with the trends of real-time cash management and, of course, artificial intelligence. I'm Liz Lumley of Late of the Banker and various other publications, and so I will be moderating this panel for you today. And we have an excellent set of speakers to talk through a lot of these topics. We are hosted as well by Tietoevry. So thank you very much for bringing this excellent topic to the forefront. Oh, excellent. We have this is we were talking before we came on that we're having sort of flashbacks to COVID, but we now have our full panel on. Hopefully all of our technical issues have been solved. So Nitesh, I'll go to you last for your introduction to see if you can come on. But I'd love to ask our panel to just briefly introduce themselves to all of you, and then we can start our discussion. So Dak, why don't we start with you?
Hi, good morning, Elizabeth, and good morning, everyone. Thank you for that. Yes, so my name is Nguyen. I look after working very closely with a lot of corporate treasurers, and hence why this subject is a very topical and very relevant. And I'm happy to be here today. So thank you for having me.
Excellent. And Maria Adele.
Hi, my name is Adele de Comite. I'm a research director within IDC in charge of the worldwide corporate banking. Thank you for inviting me, Master.
Excellent. And
Nitesh, Bhansali, I run the liquidity product set at HSBC Innovation Banking.
Excellent. Wonderful to have you. And then last but not least, Sathish, please introduce yourself.
Good morning, good afternoon. I'm Sathish Padmanathan, and I head the payments and cash management business in Tietoevry Banking. Happy to be here.
Excellent. Lovely. So I mentioned before that what we're talking about today is a lot of the global trends and shifts in cash management, and probably one of the biggest issues right now is real time. And I've sat in lots of rooms where there have been arguments about, do we need real time for all payments, and is batch overdated? So I really wanted to look at what are some of the global drivers that are pushing this need for real-time cash management. I know there's technical issues, geopolitical issues, there's economic issues. So Maria, I'll start with you on this. What are the drivers that are pushing this move to real-time?
Okay, we'll start with something completely different with respect to what you already mentioned, that still is absolutely relevant. But I think it's the cultural shift towards the instant culture. So each and every one of us is now looking to have responses in real time, okay, in an omni-channel mode. So no one is really willing to wait too long to get a response to the question. And if we're not accepting these as users, I don't see why we should accept these as business person, okay? Time is even more critical. So one side, we have a shortened period and interaction to get all feedbacks for what we're looking for. But then on the dichotomic approach to time and space is augmented, okay? Think also the blurring boundaries of banking. So it is really absolutely important, both from the way we interact with the banking activities and also the geographic reach. So we have seen this growth also further to the pandemic, that even the smaller and medium enterprises are interacting much more across the globe. So I think this is definitely enabled by the digital banking transformation and the move towards real-time banking that, of course, are making this possible. But if we consider that we have omni-channel activity to initiate payments and then multiple payment fails, we understand also how the complexity of managing all of these is absolutely much higher than in the past. And let's start that we have recognized that whatever happens in one part of the world might have a huge impact on the other. Just think about the COVID pandemic, as was said, and all the manufacturers that were having difficulties in getting the supply from China, which of course had a huge impact on the cash forecast, the liquidity, even posing the risk for survival for some corporates. So real time and Eastern culture and blurring boundaries, augmented space, there is really a lot of things that come into the picture.
You gave kind of a nice broad overview of the what you expect in your personal life. This sort of globalization is still a big trend, dealing with the rise of China. I love to have a first question where everyone gets a chance to answer. So I'll turn to you, Satish. What are you seeing as the drivers for real time?
Yeah. Thank you. I think I can't agree more with Maria. I think it's really the consumer expectation of being able to do everything with speed, and that's one dimension. But there's also another dimension of the liquidity, which both the treasurers wanted to have. Again, it's also the impact of the instant world and the batch world. There's some kind of a moderation needed today, to kind of manage the liquidity levels where the duality of both instant and batch exist. So I would think that corporates really want to have a good control on the liquidity, and they're not able to balance between the duality. I think a banker would know this better, and I'm sure the other
I'm
gentlemen.
turning banker soon.
We'll have a better view of that. Yeah.
So that's interesting when you talk about trying to balance the duality of batch process in real time. So Dak, what are you seeing as the drivers to real time?
You asked for, I would say all of the above. I think there's definitely elements of technical, geopolitical, and economic, but I think going back to Maria's point, there is certainly a cultural shift, right? The instant expectation from a consumer lens bleeding into a corporate lens. But I think, look, the global economy is increasingly unpredictable, right? The geopolitical environment can have a significant bearing on the economic drivers. The uncertainty in terms of rapid changes in things like currency and FX rates, interest rates, threats to global supply chains driven by different disruptions. All of these are kind of critical imperatives that are forcing treasurers to need to get a much better handle on their cash management, and hence the driving force towards real time and the desire to get visibility quickly across what's oftentimes a global or multinational organization. But I think whilst the geopolitical factors do certainly play a role, it ultimately, for me, comes down to the advancements in technology as the key enabler that is compelling or facilitating that shift, right? That allows the shift to real time. Because as much as we want it, if we don't have the technologies behind it to drive it, then we're not, then we're stuck. And I think we will probably touch more on it in a little while, but it's things like a greater prevalence and adoption of APIs. They've been around for a long time, but actually it's definitely facilitating better interconnectivity around financial systems, facilitating transfer of data. All of that allows for, unblocks that ability to pivot towards real time. We will move into things like the increasing adoption of an application of AI. More and more markets are moving towards instant payments. We've got then cloud technologies underpinned by data analytics, and all of these things really are coming together, I think, to really facilitate and enabling that shift towards real time. So for me, I think, geopolitical, absolutely the imperative. Technology is facilitating that.
Yeah, no, I agree. I'm glad you brought up the global, the instant payments across the world, which is a huge factor as well. So Nitesh, what are you seeing? What are you seeing as the drivers?
Again, completely agree with everybody in the room here. A couple of things from the innovation economy specifically, that is where we do all our business, and I pretty much live it 24/7. It is key from an operational resilience perspective. We cannot underestimate how important it is for things to work the first time every time for a Series A, Series B, Series C company. So that is incredibly important. What we also see in the innovation economy is clients go global very, very quickly. So if you see a corporate might, go global after having a certain amount of revenues or certain amount of employee base, a startup can have to pivot very quickly, right? So again, from that perspective, we need to have a lens on how we can support these incredible companies trying to change the world in a global scenario. And the last one, again, is what that does is brings across global supply chain, global vendors, global customers. So what everyone in the room has said, how do we ensure there is certainty in terms of information, in terms of settlement, in terms of throughput? And the startup then does what they do best with banking being invisible. I also want to bring in the other side of the coin here. Again, we see, again, from established corporate might be shareholders, but from a startup economy perspective, it's investors. So how do you not only ensure the transactions, work through the way they are, but how the information flows? Because from an investor perspective, they are very, very critical piece in terms of how much is the cash burn at a startup? Are their projections accurate? Do we need to do another funding round, or do we need to change anything from the current environment? So again, it's just not the transaction, but also the information, which has to be, real time, pretty much.
It'd be great. I'm sure we'll get into it later on in the discussion. But it'd be great to, look at the types of companies HSBC Innovation is dealing with, and the types of companies that Lloyds is dealing with, and how their needs, are congruent going forward. But I like to stir the pot a bit, and I wanted to kind of go back, not to be anti-progress, but why is batch processing so bad? Is batch processing completely dead, or is there still a need for it? Still types of payments that work with batch processing? Maria, I was gonna go to you for that. Can you defend batch processing at all?
Yes, I think we shall distinguish a bit which are the different needs. So indeed, it was mentioned by Doug, the importance of instant payments. Now, of course, with instant payments, you need to have the real-time processing, okay? And not only processing, but as it was mentioned also by Nitesh, it's very important also to give the visibility, the possibility to leverage AI to be able to make predictive analysis. Still, not all the processes need to be real-time, okay? And it is also in the instant payments regulation, it is acknowledged, for example, that anti-money laundering can be done in batch. Okay, so the scan for mitigating financial crime risk or all the delinquency that can be related to personally exposed person. So you have the subjective and also then the transaction needs to be assessed in real time, because of course you have to look at these while you're processing these, which is already quite challenging, even in a few seconds. But screening, analyzing the subjective perspective of the company profiles of the company risk exposure inside, this can be done in batch, for example. One thing that we have not mentioned, even though Nitesh has introduced it at the point of the digital operation resilience and all the interconnectiveness, both from a technical perspective, from economic perspective, that is a risk that needs to be mitigated. Okay, we have also the element of compliance. So many compliance checks can be done batch, but not once a month. Okay, so I think also where batch applies, it is to be with shorter time frames. Okay. So, and in that respect, also there are some activities like identifying the payroll processing. You don't need to create the file real time. The processing can eventually either be done through standard credit transfer, SEPA credit transfer, or even if needed for whatever reasons with instant payments, but creating the file that defines who has to receive which amounts. You can do it in batch. So there is a balance. Okay.
Yeah.
The important thing is that two elements coexist in harmony. So I think one other very important element is the integration. Integration among players, integration among the progress and the different processes, and an alignment about the underlying data.
Mm. So, Dak, I'll go to you. I mean, I'll stay with you to talk about challenges as well. But it was interesting when Nitesh was talking about the innovation economy wanting this 24/7 existence. Lloyds has a wider client base. How is batch completely outdated for the clients you're seeing?
I would. Can you hear me?
Yes. Yep. We can hear you. Yep.
And look, treasurers, but not just the exclusive domain of treasurers, to be able to establish real-time liquidity positions, right? To optimize their working capital, to be able to deliver real-time payment journeys, and a lot of this is very important for them to ensure that their cash is in the right place at the right time, but not earlier, not later, but at the right time. And so real time facilitates that. Nitesh's point around the innovation economy and everything, the demand for 24/7, absolutely, I do all agree with that. But I think for certainly within the client set that I deal with, there are broad considerations as well. And I'll start with on the batch side, and then we can move into the real-time API and API-driven side, right? Batch processing isn't outdated because it does serve a purpose, right? And it should still be a key core part of a treasurer's armory, right? It ultimately comes down to what's required. Is there a need for a payment or for a report to be sent or delivered or consumed in real time, right? There are always cases around where not every single payment or disbursement is urgent or immediate or requires that immediacy, right? And I think that's quite important, right? Because the strength of and benefits of batch processing haven't really gone away. It's just now being complemented by alternative options that real time brings, right? Because, for example, batch was designed and is really great for large volumes, right? Sending an instant payment is great. Sending 1 million instant payments, one at a time isn't necessarily as efficient or effective, right? So it really comes down to the imperative around, what is really needed. And then ultimately, right, it comes down to cost, right? The operational cost to manage and facilitate support 24/7, the constant need to constantly monitor and ensure that systems is up and running. So there's a cost efficiency play here as well that needs to be considered, right? And then building on, and I was having a conversation with a client this morning actually, because we were talking about friction and frictionless journeys in payment journeys, and actually that moves into the realm of is there good latency, good inertia in payments journey? Does it need to be entirely frictionless? Because actually, the ability, and I think Maria touched on that point, the ability to pick up on and screen and mitigate like fraud and so forth, does introduce friction in the journey, but actually for positive benefits. So I think whilst that's slightly different topic, the point around here is, I think my view certainly in the clients that I deal with, and what we always speak to is, whilst there is a desire for real time, there isn't always that business case or strength in kind of argument for why they need to move to real time unless they have to. So absolutely grant what Nitesh is saying in terms of some of the clients that he deals with, some of the stakeholders that he needs to manage. Real time is an imperative. For corporate treasurers, it's always a fine balance between efficient use of his resources, right? And then that's ultimately what I think it comes down to.
Yeah. So you mentioned, the dealing with APIs, dealing with whether or not there's a business case. issues around, good friction. Fraud is a big issue whenever anyone mentions real time. Maria, are there any more challenges you can think of in the, there's this desire for real time, but then there's the reality of it. What are the challenges to that?
Yeah, I think, as I said, there is the need to balance also this expectation towards real time processing, but providing a special real time visibility. I think this is really important. And then it was mentioned that there is also an issue about cost. Cost and complexity are definitely making a big part of the concerns of the challenges when moving to real time. But luckily enough, with the technological innovation and with some innovative features, we can automate some processes that will not be possible to be run in a traditional way. So just think now from a treasury perspective about the automated sweeps, pooling, and so on. Okay, this is creating and supporting a better way to somehow ease the challenges to meet the real-time expectations. So then there are the other challenges about the technological integration. You were asking before about batch towards real time, but not only this, it is a matter of technological integration between more advanced solution, legacy systems. So if you're not a startup as a bank, you have a multi-layer. So integrating them in an efficient way is definitely important to be able to address and provide services in real time. All in all, then, as we said, AI and automation can help, both, for example, as was mentioned about fraud management, okay? And so trying to smooth, whenever possible, the customer experience, but still, there are some processes that needs to be run. Very, very important, I say it again, is the data. If you have to move at speed, you cannot really rely on system where you were going SDP straight to the printer, then reconciling manually, okay? And this takes ages. So by no means. But it is important that we have a single source of truth. So the point of having clear data, also to understand where the money is sitting, what is expected to arrive inside. So the cultural shift, we mentioned it before, and I think another important thing is the security concerns. Security is a big deal when and indeed fraudster, what they do when they want to perpetrate a fraud, the first thing is they push on this sense of urgency. So cybersecurity and the security concerns are there. And that's where compliance and regulatory evolution is also stepping in to try to mitigate this risk, adding some burden as well.
Yeah, there's a lot of moving parts.
Indeed.
Yeah. So I'm going to Sathish now. I mean, are all of the challenges you're hearing, are you seeing that? Like, what are the challenges you're seeing in moving to real time?
Yeah, I want to slightly cover the different dimension of challenges we see while we're talking to some of our customers and prospects. I think the real-time adoption has not been very easy for most of the banks because if you've seen how banking has evolved over years, the IT applications in the banks, were not really designed for the real-time world, right? A simple example, which most of the banks have struggled and are still struggling, is legacy core systems. Some data says more than 50% of the banks still run on mainframe COBOL-based systems, which typically have to come down to kind of run your overnight batch, right? And then you're not able to kind of accept balance checks and do reservation during that time, and that is a big problem. And then core modernization is never a easy thing. It takes multiple years before you can actually say that you're successful with core modernization. So that's one part. And then there are also some tactical solutions in place. Like we developed something called a standard ledger, part of our all-in-one cash management suite, that would enable clients to have a tactical solution while still running legacy core solutions, right? Where we act as a shadow ledger, taking in the fund check and reservation when the main ledger is down. So that's one. And second, this also I picked up from Maria, is the compliance part of it, right? I mean, with instant payments, is also high possibility of fraud, but then banks and central banks around the world are trying to put in checks in place, like confirmation of pay has been active for years in the UK, but then now the Europe region is trying to put in verification of pay, and we see that banks are also running to meet the deadline of October this year to have verification of pay in place. Yeah, so one, the infrastructure, the technology challenge, and another one is security and compliance.
Yeah. So we've got. So I want to make sure that we touch on two items before the end of this event, and one is virtual accounts, and the other is AI. So I'm gonna stay with you, Sathish, a little bit to start with the virtual account conversation. We've seen that trend come out from a lot of banks over the past few years. What problem does that solve?
Virtual accounts is very close to my heart. I mean, we've been one of the first ones to go out with virtual accounts, many years ago. Traditionally, virtual accounts were, designed to solve a very different problem of, trying to rationalize your real accounts, have efficiency measures in place, trying to enable self-service and so on. But we've seen over the years the need of virtual accounts is also kind of completely changed. Now we're kind of trying to have conversation with our clients where they're trying to use virtual accounts for completely a different setup. We see what we call as on-demand virtual accounts. Using virtual accounts for a specific purpose one time, and then the virtual account is gone. And then there are banks which are trying to offer virtual accounts as a banking as a service to their PSPs and to their fintech clients, who in turn would offer that as a kind of a wallet to their customers with full transactional ability, from linking a debit card, being able to issue a check. Check is still prevalent in the US. So it's also the usage of virtual accounts are very different today, and we've seen that change quite significant during the last year and this year actually.
So Dak, I wanted to get your view. I mean, on the trend of virtual accounts and what benefits they serve.
Yeah, definitely. So first and foremost, I would say that virtual accounts is also very close to my heart. We built at Lloyds. We modernized our banking to address the legacy infrastructure issues that Sathish mentioned just earlier on. And as part of that build out, we also basically built from the ground up our own virtual account solution. So, and actually, so to answer your point, then, virtual accounts in themselves have been around for quite some time, right? They're not new. They've been around for quite a number of decades. But I really think that it's probably within the last 3 to 5 years that they've really come into the mainstream spotlight, right? And that's underpinned again by technology. It's underpinned by the fact that virtual accounts now can carry their own virtual IBANs, can carry their own sort code account numbers. So they're basically directly addressable to scheme. So they can look and feel and operate exactly like a bank account, but have the benefit of folding into a single real physical account with a ledger segregation of the balances. So I think that in itself has then allowed a much broader application. And I'll first touch upon the Treasury ones, and then I guess I can move on to the broader applications. But the treasurers want to streamline their account structures. They don't want to have to manage hundreds or even thousands of different accounts, physical accounts. Yeah, it's costly, it's expensive. I think there's a study that was done in the past where it can cost up to $1,000 or $2,000 to maintain a real bank account. And if that can be rationalized, you think of a large global corporate that would have thousands of accounts or tens of thousands of accounts. If that can be rationalized into a smaller number, that significantly can save on operational costs and maintenance costs and so forth, right? But then ultimately, virtual accounts is designed initially to support reconciliation by being able to easily segregate out and identify and trace transactions back to the source. That streamlines the reconciliation process, right? Not only that, then, but treasurers who apply virtual accounts within their organizations have a natural consolidation of the cash and the liquidity. So it overcomes significant challenges of having to, physically move and consolidate cash, intraday, end of day, that kind of stuff. Within a virtual structure, there's a natural concentration. So there are benefits that then that come off the back of that. And then obviously the applications broaden into the being able to run, in-house banking structures, running payments on behalf of, receivables on behalf of. So it's very, very broad from a treasury sphere. But I think just picking up on what Sathish was saying, I was really surprised that actually within our solution that over 25% of our clients on our kind of new modern proposition use virtual accounts, and actually only a small fraction of that are using or being applied in a corporate treasury use case, right? It's to what Sathish was saying. We've got clients who use it extensively to support digital wallet solutions. They stand up refund propositions. It's a B2B2C proposition now. They use our virtual solution to support their own internal client propositions. There's early salary drawdown use cases, savings and wealth management. The application is practically endless, and that's again underpinned by the flexibility of being able to open and close accounts quickly, easily, using APIs, having the direct connectivity into the banking scheme, so running it like real bank accounts, and then, like you say, the almost kind of the use and throwaway type of solution, because actually you can ping an API to create an account, trigger a business process, make the settlement, and then close that account again just as quickly. So that prevalence is just exploded in terms of the use cases possible.
Perfect. Well, we're going to move on. We're going to move on to talk about AI now. And Nitesh, I'm going to bring you in. I know you've had some technical issues, so I'm going to bring you in to talk first about this. Maria talked a bit about the importance of data and real-time compliance, and now we have all these new, expanding, sophisticated AI tools at our disposal. What are you seeing in using AI and generative AI and sophisticated AI in compliance and real time now? Oh, Nitesh, you're muted.
Can you hear me all right?
Yes, you can. Yep.
Oh, perfect. Okay, I finally got through that one. And thanks again. I heard what Maria said and completely agree with her. What we've seen, and we're in an envious position here because we've got clients who are building these, and we can hear both a customer lens to it from terms of what our clients think of it, but also an end customer lens, which is what our customer think about it. And what we need to understand, especially in the financial services world, is the computing power has now has gone up manifold. And what that does is the reams of data with financial services companies have like ours. We can use that data and play around with it, provide our clients, significant edge in terms of what is the forecasting, what is the pattern over there? Is there a fraud detection where we can improve? And the biggest one which we've seen, and we're talking to our clients on these ones, is the what if scenario. A lot of clients go into what if scenarios, either that is planning or that is budgeting or that is providing, an investor pitch. And the what if analysis is much efficient in a Gen AI and AI world we're seeing now. The other one, which is very interesting, is also from a forecasting of what the forecasting was and then how the forecasting has performed once we reach that stage. So again, I think AI is going to improve a treasurer's life. And with the increase in computing power and the increase in data lakes available with financial services companies, there is a significant opportunity to both improve risk management and also increase returns from surplus liquidity.
Excellent. So we only have a few more minutes. So I'm hoping that the panel will indulge me. I'm going to do a little bit of a bonus question. Tietoevry put out a survey that listed KYC as one of the top concerns for corporates. Since we've all been talking about a lot of shifts and trends with corporates and cash management in 2022, I wonder if I get a very short answer from each of you of what you think is some of the top priorities for corporates right now. So Maria, maybe I can start with you. What is very short? We only have a few more minutes. Just what are some of the top priorities you're seeing?
With respect to know your customer activities and the help that the bank can provide the corporates with, I think it's amazing the capabilities that the banks have in detecting suspicious transaction, but also in gathering all the information. Think that with the digital operation resilience sector, banks now are allowed to have information sharing agreements, which means being able to get more information. And then thanks to AI, they can really do some elaboration that goes about fraud, but it goes also about forecasting. So I think three things that are very important is one side is introducing the automation of some processes, okay? Then let's move into the AI step. We have a super wide adoption of AI and machine learning, for example, in identifying the fraud management, but also the simulations of liquidity, the automation of processes, as I said, with cash pooling, automated sweeps, and so on. And the last thing, and then the stop is about the potential of generative AI. Think about adverse media coverage. Now, you understand that someone, a counterparty on the other side of the world, might have an adverse media coverage, and these can be detected through GenAI and distributed internally with automated workflows to create early warnings. And I'll stop, but raise thousands of other things that we could talk about. So I'll stop here. Okay?
Excellent. So wonderful. So I'll go to Nitesh now. What is quick your final statement? What are the top priorities for corporates you're seeing?
We've seen largely liquidity management, especially in the face of interest rates being higher for longer. That has been a key theme which we've seen. We've also seen, like everyone's mentioned, real-time payments is up there. Most of our clients expect both settlement and certainty in terms of payment systems, pretty much replicating the consumer behavior. And the last one we've seen is enhanced multi-currency treasury management. Again, goes back to the initial points which the panel has made over here around geopolitics and the volatility around it. But those are the three main themes we've seen with our customers.
It's interesting. I attended a conference on stablecoins yesterday, which we weren't going to go on, but it's interesting looking at multi-currency. Dak, what are you seeing as a top priority for corporates right now?
But I think to answer your question around what they look for in banking relationships, because it's so broad, right? It ultimately comes down to the unique requirements of that specific corporate and what the key priorities are. So I don't think it's a one size fits all. I think specific to your question around what they're looking for in a banking relationship, I think it's about turning to their banking providers as trusted advisors to navigate them through these changes, to navigate them through the challenges and also the key objectives that they need to meet, whether that's real-time instant payments, whether that's certainty of settlement, whether that's digitizing, streamlining, simplifying the KYC process. It could be anything that we that they may be faced into. So I think they're increasingly turning to their banking providers as not just a contractual one-way relationship, but as much broader trusted advisors to help them through the journey, right? To digitize, to simplify, streamline, all those buzzwords that you can throw out there.
Excellent. So Nitesh, you have the final word. What are you seeing as a top priority?
Thank you. I think if I kind of align with our topic today, one of the top priority for Treasury should be to improve the real-time cash visibility. I think if they have to probably use the right pooling mechanisms. For example, probably the most popular one is probably zero target balancing, which kind of really enables the group's total net liquidity per currency, including all zero balance transactions. So I would say that it's really having the right pooling mechanism in place.
Excellent. Wonderful. Maria, Dak, Sathish, Nitesh, thank you so much for this conversation. I greatly appreciate it. Thank you very much.
Thank you so much.
Pleasure. Thank you.